Tomorrow could become one of the most important days for the U.S. stock market this month. Nvidia earnings are coming after the market closes, bond yields are rising again, and investors are waiting for the Federal Reserve minutes. Right now, Wall Street is nervous because these three events together could decide the next major move for the Nasdaq, AI stocks, and the overall market. Over the last few months, the market rally has been heavily driven by AI optimism, especially Nvidia. But at the same time, rising bond yields and inflation fears are creating pressure on stocks. That's why tomorrow's setup is extremely important. If Nvidia delivers strong results, AI stocks could rally again. But if bond yields continue rising and the Fed sounds hawkish, the market could quickly turn negative. Let's start with Nvidia. Nvidia will release its quarterly earnings tomorrow after the U.S. market closes. This is one of the most anticipated earnings reports on Wall Street because Nvidia is currently leading the entire AI boom. Major tech companies like Microsoft, Google, Amazon, and Meta are spending billions of dollars on AI infrastructure, and most of that demand still depends on Nvidia chips. Investors will mainly focus on AI chip demand, data center revenue, Blackwell chip updates, profit margins, and most importantly, Nvidia's future guidance. Expectations are already extremely high. Nvidia stock has seen massive gains because of AI excitement, and now Wall Street wants proof that the growth is still continuing at a strong pace. If Nvidia reports strong revenue growth, strong AI demand, and positive guidance, we could see the Nasdaq rally sharply, semiconductor stocks move higher, and AI-related companies gain momentum once again. But if Nvidia disappoints even slightly, the reaction could become very aggressive because the market has already priced in near-perfect expectations. Now let's talk about another major concern: rising bond yields. The U.S. 10-year Treasury yield is currently around 4.6%, while the 30-year Treasury yield is near 5.1%. Recently, the 10-year yield has risen from around 4.3% to 4.6%, and the 30-year yield climbed from near 4.8% to above 5%. This may look like a small move, but in financial markets, it's a very significant increase. Rising bond yields are making Wall Street nervous again. So why are bond yields important for the stock market? When bond yields rise, borrowing becomes more expensive, companies face higher financing costs, and investors often move money away from stocks into safer bonds. High-growth technology companies usually face the most pressure because their valuations depend heavily on future growth expectations. That's why rising yields often hurt the Nasdaq, AI stocks, semiconductor companies, and other growth sectors. Many investors now believe that the bond market is warning that inflation could stay higher for longer. And tomorrow, investors will also closely watch the Federal Reserve minutes. To clarify, this is not a live Fed meeting or an interest rate decision. The Fed minutes are detailed notes from the Federal Reserve's previous meeting. These notes help investors understand what policymakers are thinking about inflation, interest rates, and the overall economy. Right now, the market is extremely sensitive to anything related to interest rates. Investors want to know whether the Federal Reserve is still worried about inflation and whether interest rates may stay higher for longer. Now, if the Fed minutes sound hawkish, meaning officials remain concerned about inflation and rate cuts may be delayed, then bond yields could rise even further and tech stocks may come under additional pressure. But if the Fed sounds more relaxed about inflation, investors may see that as positive for the market and stocks could react higher. At the moment, Wall Street is caught between two powerful forces. On one side, there is strong AI optimism driven by Nvidia and continued growth in artificial intelligence spending. On the other side, there are rising bond yields, inflation concerns, and fears that interest rates could remain high for longer than expected. That's why tomorrow could become a very volatile trading session for the U.S. stock market. So the three biggest things investors are watching are Nvidia quarterly earnings, rising Treasury bond yields, and the Federal Reserve minutes. The biggest question now is this: can Nvidia's AI momentum overcome the pressure from rising yields and higher interest rates? We'll find out very soon. If you enjoyed this U.S. market update, don't forget to subscribe for more daily Wall Street analysis.